The share price of Coal India, the largest coal company in the world, has returned an impressive 57% in the last 2 years. The gains come on the back of the rising coal sales as the government pushes for more electricity penetration across the nation. But, is there more to it? Or all the rally is done and you are late to the party? In this article, we'll try to know it by conducting a fundamental analysis of Coal India Limited. Company overview. Coal India Limited, CIL, is the largest coal company in the world. It is a Maharatna status government company under the Ministry of Coal, Government of India. The central public sector undertaking was incorporated 48 years ago in 1975. CIL is structured as a holding company owning 84 mining areas across 8 Indian states through its various subsidiaries. As of April 1, 2022, the company had 318 mines. Coal India accounts for almost 80% of the overall coal produced in the country. The company matches 40% of the primary commercial power demand alone. Its scale of operations can be gauged from the fact that it produced a whopping 623 million ton (MT) of coal during the free 2021-22. The mining and sale of coal is the main revenue stream for the company. Apart from this, the loading and additional transportation charges and evacuation facility charges form part of other operating income. In simple terms, these are logistic services that are provided to the customers of Coal India. The sale of coal accounted for 91.71% of the total operating income of the company in FY22. SWOT analysis of Coal India. Strengths. CIL enjoys economies of scale given its large scale of operations. Its huge coal resources and operations network is spread across the country, helping it to cater to its customers easily. Weaknesses. Coal India has high wages cost hurting its margins. Additionally, coal production is costly in underground, legacy mines. Opportunities. The company is putting efforts to diversify into the solar sector. Rural electrification and the Power for All Uday scheme will increase the demand for energy in India significantly. Threats. Renewable energy production is one of the biggest threats to coal-based power generation. Land acquisition and the rise in the cost of land are other threats that can counter CIL's efforts to produce more coal. Industry overview. India is the second largest coal producer in the world. The country produced 777.03 MT of coal in the financial year 2021-22. The government has a huge influence on the Indian coal industry with state-owned companies Coal India and Singareni Collieries Company. Talking about the demand, the energy sector in India is dependent on coal as 55% of the installed generation capacity is coal-powered. According to the draft Niti Aayog report, November 21, on coal demand in India 2030 and beyond, the coal demand for power production will stay strong and even increase in the coming years as the nation plans to increase its energy production in the future. However, the share of coal is projected to come down in percentage terms as the nation will move further towards renewable energy. The reduction of coal in India's energy mix is estimated to shrink to 52% by 2030, from 72% at present, 43% by 2035, and 34% by 2040. India's per capita annual power consumption at 1,276 in FY21 was much lower than even other developing countries like South Africa and Brazil. Thus, the overall power demand in India is expected to grow at a strong pace. A variety of factors, rising living standards, higher electrical and electronic appliance penetration even across rural areas, more focus of the government on boosting the manufacturing sector's contribution to GDP growth, construction of data centers, and better irrigation through electric pump sets in the agricultural sector will contribute to higher energy demand in the years to come. Revenue and net profit growth. The operating revenue and profits of Coal India have grown inconsistently over the last 6 years. The top line expanded by 22% in FY22 to 109,714 crore rupees from 90,026 crore rupees last year. The bottom line grew by 37% during the same period to 17,378 crore rupees. The earnings momentum is picking up. For instance, the trailing 12-month (TTM) Income and net profit after the December 2022 quarter results stood at 132,806 crore rupees and 29,312 crore rupees respectively. The table shows the operating revenues and net profits of Coal India for the previous 6 financial years. Operating and net profit margin. The operating and net profit margins have remained strong over the years for the mining company. However, FY18 margins were depressed on the account of a sudden increase in employee benefit expenses from 33,523 crore rupees in FY17 to 42,634 crore rupees. The table highlights the operating profit margins and net profit margins of Coal India for the past 6 fiscals. Return ratios. ROCE and ROE. Moving on to the efficiency analysis, Coal India is a profitable business with a high return on equity and return on capital employed. There is a significant discrepancy between the ROE and the ROCE figures because of various other provisions forming part of the non-current liabilities. The table shows the ROCE and ROE of Coal India for the last 5 years. Debt, equity and interest coverage. Having covered the business, industry landscape, and P&L metrics of the company, we'll now do a quick leverage study as part of our fundamental analysis of Coal India. It is largely a debt-free stock with a negligible debt-to-equity ratio and a high interest coverage ratio. Furthermore, being a government miner in the energy sector, the company enjoys a strong credit rating of CCRAA, stable from CRISIL. The debt-to-equity ratio and interest coverage ratio of Coal India for the past few years are presented. Future plans of Coal India. 1. CIL has targeted a coal supply of 700 MT in FY 2022-23, a 13% jump over the FY 22 figure. 2. The ambitious goal of the Government of India to supply electricity to every home 24/7 by 2025 presents a huge opportunity for the company, as this will result in the 1 billion ton (BT) annual production of coal by 2024-25. 3. In line with its production goals, the CPSU has earmarked a large capex of 16,500 crore rupees towards volume growth in the near future. 4. Furthermore, 20,000 crore rupees worth of railway track projects are under execution already to increase the evacuation of coal. In conclusion, the increase in the sale of coal has definitely changed the fortunes of Coal India and its investors in the last 2 years. Interested investors will have to closely follow the offtake figures and capex plans of the company to see where the stock is going. After going through our fundamental analysis of Coal India, do you think the company will be able to increase production in the coming quarters? What can be speed bumps for the stock?